Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories behind the corporate world, or as we will see today, secrets that are just now becoming public. Today we're diving into a report from H.C.M. IT Acquisition Corp, a company that's been making some interesting moves, and we're going to decode what their latest filing really means. Before we start talking numbers, if you're all about cutting through the corporate jargon and getting straight to the investing insights, make sure you hit that subscribe button. And hey, we've got a fantastic community over on our Discord server, linked in the description below. Come join the conversation. So what is the big news here? Well, on the 29th of September 2025, H.C.M. the Thu Acquisition Corp, or H.C.M. Thu as we LL call them, announced a significant step forward in their business combination with Terrestrial Energy Incorporated. Think of it as getting the official green light to merge these two companies. The really important part of this announcement is that the US Securities and Exchange Commission, or the SEC, declared their registration statement effective. This is a huge hurdle cleared, meaning HCM2 can now move ahead with officially bringing Terrestrial Energy into the fold. This filing is all about that SEGAS -4 registration statement. It's essentially a multi-purpose document that tells investors everything they need to know about this merger. It acts as both a proxy statement asking HCM2 shareholders to vote on the deal, and a prospectus detailing the securities that will be issued as part of the combination. They also confirmed that the definitive proxy statement and prospectus have been sent out to HCM2 shareholders who are eligible to vote. This means the shareholders are now officially being asked to give their say on whether this business combination should happen. Now, let's look at what's actually being traded here. HCM2 has units, and these units are made up of two parts: one share of their Class A ordinary share and half of a redeemable warrant. These are traded under the ticker HONDU on the Nasdaq stock market. They also have Class A ordinary shares themselves, which trade as HOND on the Nasdaq. And then there are the redeemable warrants, which give the holder the right to buy a Class A ordinary share at a specific price, $11.5 in this case, trading under the ticker HONDU, also on Nasdaq. It's this whole package of securities that HCM Trees is hoping to see successfully become part of the combined entity. Here is a quick flag for you, HCM. A2 is operating as an emerging growth company. This means they get to follow some slightly scaled back reporting rules compared to larger, more established companies. They've also indicated they are not opting out of extended transition periods for new or revised accounting standards, which means they can continue to use older standards for a bit longer if they choose. This is pretty common for companies at this stage, aiming for flexibility as they navigate growth and these significant corporate actions. Now, the filing itself includes a press release from the 29th of September 2025, which is where the real meat of the announcement lies. While the press release is technically furnished and not filed in the same way as the rest of the report, it gives us the official word on the CC effectiveness. It reiterates that the registration statement is now effective, clearing the path for the business combination. This section is important because it touches on who might be influencing the shareholder vote. It clarifies that HCM2 and Terrestrial Energy, along with their directors and executive officers, could be seen as participants who are encouraging shareholders to vote a certain way. It's a standard disclosure to make sure everyone is aware of who might have a vested interest in the outcome of shareholder decisions, and encourages investors to look at the registration statement and proxy statement for more details on these individuals and their interests. It's all about transparency in the lead up to a big vote like this. And then we get into the forward-looking statements. This is where the companies lay out their hopes and expectations for the future, but with a big dose of caution. They're basically saying, here's what we think will happen, but a lot can change, and these are things we're watching closely. It's a standard but crucial part of these filings. They list a whole range of risks that could mess with their plans. For instance, they mentioned the possibility of any event that could lead to terminating the definitive agreements for this business combination. Plus, there are legal proceedings, failure to get shareholder approval, or changes to the deal structure required by law. They also want to make sure investors know that the ability to keep their stock exchange listing post-combination, dealing with potential disruptions to current operations, and the big one, actually achieving the anticipated benefits of the merger, are all still up in the air. Think about competition, managing growth, keeping customers, and retaining key staff. These are all significant challenges that they acknowledge could impact what they achieve. Well, this filing is more about regulatory milestones and the path to a merger rather than detailed financial performance in a specific quarter. We don't have the juicy financial tables here showing revenue growth or profit margins from HCM. IT itself in this particular report, that's because HCM THRU is a special purpose acquisition company, or an SPAC, and its primary purpose is to acquire another company like Terrestrial Energy. So its own financials in this context are less about operational performance and more about its structure, listing information, and the progress of its merger, instead of diving into specific numbers from H.C.M. IS individual financial performance, which isn't the focus of this particular filing. Let's look at it from a strategic perspective, like old Warren Buffett would. This SE filing is essentially a signpost indicating H.C.M. IT is successfully navigating the complex regulatory pathway to merge with Terrestrial Energy. The story here isn't about quarterly profits at H.C.M. 2, but about the advancement of a significant corporate transaction. The big financial aspect is the completion of this merger, which will then unlock Terrestrial Energy's financials and future prospects for public investors. The key takeaway is that the SEC declaring the registration statement effective means that the merger is moving forward as planned. This de-risks the transaction for investors who are looking at the potential of Terrestrial Energy. Remember, H.C.M. is a SPA. C is essentially a vehicle to bring Terrestrial Energy public, so the success of this filing directly impacts the future financial health and reporting visibility not of H.C.M. as a standalone operating business, but of the combined entity that will aim to capitalize on Terrestrial Energy's business. The filing essentially wraps up by telling us what documents are attached. The main event here is Exhibit 99.1, which is the press release we've been discussing, dated the 29th of September 2025, and then Therese the cover page interactive data file, formatted in something called inline XBRL, which is for machine readability. So, it's less about new financial statements being filed and more about the procedural completion of a major step towards the merger. And finally, we have this report being signed off by Sean Matthews, the Chief Executive Officer of H.C.M. through Acquisition Corp, on the 29th of September 2025. This signature confirms that management is officially submitting this report to the CC. So, what is my take on this? This filing is less about a financial performance review of H.C.M. 2 and more about a crucial regulatory milestone. The big number here is T-profit or revenue, but the fact that this SE filing and the declaration of effectiveness signifies progress toward the merger completion. The real story and the financial future of this venture will unfold once Terrestrial Energy is officially part of the combined company. The main strength revealed here is H.C.M. 3's ability to successfully navigate the C process. This builds confidence that the merger is on track. The biggest risk is still the ultimate success and profitability of Terrestrial Energy itself post-merger, as well as the potential for shareholder redemptions which could impact the capital available for the combined company. My conclusion is that this filing is a definite positive signal for the merger going through. Investors should now shift their focus to the future prospects and detailed financials of Terrestrial Energy once that combination is finalized. What's your opinion on this merger and the implications for Terrestrial Energy once it's public? Let me know your thoughts in the comments below. If you found this breakdown helpful, smash that like button and subscribe for more in-depth corporate analysis. And don't forget to join our Discord community, linked in the description. Thanks for watching, and we'll see you in the next one.